What's up, crypto fam, and welcome back to Bitcoin Bulletin. We're kicking things off with a bang today as Defiance files for a new Bitcoin and Ethereum ETF, and they've got a high-stakes strategy. They're planning to buy up spot ETFs while simultaneously shorting futures contracts. This is all about capturing that sweet arbitrage, profiting from any price discrepancies that pop up between the two markets. It's a sophisticated move that could shake up how institutional money plays in the crypto space, and we're diving deep into what it means for you. But it's not all sunshine and gains. We've got a serious warning coming out of Roswell, where a woman tragically lost over $100,000 in a devastating Bitcoin scam. This isn't an isolated incident. Police are reporting a significant uptick in these crypto scams across the metro area, and it's a stark reminder to stay vigilant. We'll break down how this happened and what you can do to protect yourself from falling victim to these predatory schemes. Shifting gears to the halls of power, a formidable group of Bitcoin advocates has just formed the Treasury Council. This isn't just any lobbying group. It's comprised of 9 CEOs from major companies that already hold Bitcoin on their corporate treasuries. Their mission? To aggressively push for greater Bitcoin adoption right there in Congress. We're talking about a united front of big players aiming to shape policy and bring Bitcoin further into the mainstream corporate world. And get this, Bitcoin miners are on the move, transferring massive amounts from their reserves, and this has the market buzzing with sell-off fears. Are they bracing for a downturn, or is something else brewing? Plus, investors are rushing into the hottest new presales, with Bitcoin Hyper, BlockDag, and Maxi Doge making serious waves. Stay tuned. Don't forget to smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Defiance aims for arbitrage gold with new Bitcoin and Ethereum ETFs. Get ready, because Defiance is rolling out a groundbreaking strategy with their new Bitcoin and Ethereum ETFs, designed to put a serious dent in the arbitrage game. This isn't your average ETF filing. Defiance plans to stack spot Bitcoin and Ethereum ETFs while simultaneously shorting futures contracts. The goal is pure profit. Capitalize on any price differences or arbitrage opportunities that emerge between the spot market and the futures market. This sophisticated approach aims to generate consistent returns by exploiting market inefficiencies, and it could signal a new era for institutional investors looking to hedge their crypto exposure. This move is significant because it shows a maturing market where sophisticated financial instruments are being developed for digital assets. By targeting arbitrage, Defiance is looking to offer a unique product that could appeal to hedge funds and other sophisticated investors seeking uncorrelated returns. It's a move that could further bridge the gap between traditional finance and the rapidly evolving world of cryptocurrency. The crypto community is buzzing about this latest development. Analysts are dissecting the potential impact on market volatility and the implications for other ETF issuers. Will this strategy become the new standard for crypto ETFs, or is it a niche play? The implications are vast, and many are watching closely to see if Defiance can successfully execute this complex trading strategy and deliver on its promise of capturing arbitrage profits. But what does this mean for the average investor? And is it all smooth sailing, or are there hidden risks? Next, we're diving into a chilling warning from Roswell about a devastating Bitcoin scam that cost one woman over $100,000. Roswell woman loses over $100,000 in devastating Bitcoin scam. A serious wake-up call is sounding from Roswell, where a local woman has fallen victim to a sophisticated Bitcoin scam, losing a staggering sum of over $100,000. This incident is part of a deeply concerning trend that local law enforcement is flagging as a growing problem within the metro area. The details of the scam are still emerging, but authorities are emphasizing that these criminal operations are becoming increasingly elaborate and targeted, preying on unsuspecting individuals. This devastating loss highlights the persistent threats within the cryptocurrency space and the critical need for enhanced security awareness. As Bitcoin and other digital assets become more mainstream, so do the tactics of scammers looking to exploit them. The sheer amount lost underscores the financial ruin these scams can inflict, making it a crucial issue for anyone involved in the crypto market. News of this scam has sent ripples of concern through the community, with many users sharing their own close calls and offering advice on how to spot fraudulent schemes. Law enforcement is urging caution and encouraging anyone who suspects they've been targeted to report it immediately. The Roswell Police Department is working to track down the perpetrators, but the incident serves as a stark reminder of the dangers lurking in the digital Wild West. While this scam is a harsh reminder of the risks, there's a powerful new alliance forming to bring Bitcoin into the corporate fold. Get ready for the Treasury Council, a group of CEOs aiming to boost Bitcoin adoption in Congress. Bitcoin Advocates Unite. Treasury Council forms to drive corporate adoption in Congress. A significant move is underway in the world of Bitcoin advocacy, as a powerful new entity known as the Treasury Council has been officially formed. This council is not just a collection of enthusiasts. It's comprised of 9 chief executives from prominent companies that have already embraced Bitcoin, holding substantial amounts in their corporate treasuries. Their unified mission is clear: to aggressively push for greater Bitcoin adoption and favorable policies within the halls of Congress. This strategic alliance represents a major step forward for Bitcoin's integration into the mainstream financial system. By bringing together leaders from companies that have already demonstrated confidence in Bitcoin, the Treasury Council aims to leverage their collective influence and experience to educate policymakers and advocate for a regulatory environment that supports corporate Bitcoin adoption. Their insider knowledge and demonstrated commitment make them a formidable force in shaping the future of digital assets in corporate America. The formation of the Treasury Council has generated considerable excitement and optimism within the Bitcoin community. Industry observers see this as a crucial development that could accelerate the acceptance of Bitcoin by large corporations and potentially lead to more supportive legislation. The Council's proactive approach signifies a new level of organized effort to influence policy, signaling that major players are serious about Bitcoin's long-term viability and its role in the global economy. But as big players strategize, miners are making moves that have the market on edge. We're talking massive Bitcoin reserve transfers and the hunt for the best new presales like Bitcoin Hyper, BlockDag, and Maxi Doge. Bitcoin miners' reserve moves spark sell-off fears as investors eye presale opportunities. Recent on-chain data reveals a dramatic shift in Bitcoin miner behavior. Historically, large amounts of Bitcoin are being transferred out of their reserves. This development has sent shockwaves through the market, with many observers interpreting it as a potential precursor to increased selling pressure and subsequent price drops. The logic is straightforward. Miners holding BTC as reserves reduce the available supply. When these reserves are moved to exchanges or liquid wallets, they can be sold, potentially flooding the market. This pattern emerges at a critical juncture as Bitcoin hovers around the $115K mark, with significant liquidation levels just above and below. The core concern is that a synchronized sell-off by miners, driven by costs, market conditions, or profit-taking, could overwhelm demand. This scenario directly invokes the fundamental economic principle of supply and demand. An increased supply without a corresponding rise in demand typically leads to price depreciation. Currently, miner activity might be outpacing demand growth, creating a bearish signal. In light of these potential market dynamics, savvy investors are increasingly turning their attention to crypto presales as a way to mitigate risk and secure potential upside. Projects like Bitcoin Hyper, which promises to enhance Bitcoin's scalability using a Solana virtual machine integration, have already raised over $16.2 million. BlockDag, utilizing direct acrylic graphs DAGs and aiming for high transaction speeds, has secured over $400 million in presale funding. Even meme coins like Maxi Doge are making bold claims, raising over $2.2 million with an aggressive tokenomics model focused on rapid growth. These presales offer a chance to get in at a potentially lower price point before official launches, attracting investors looking for opportunities amidst broader market uncertainty. Could these minor outflows spell trouble for Bitcoin's price, or are new innovations poised to absorb the supply? Stick around as we break down the full impact and what it means for your portfolio. And that's a wrap on today's Bitcoin Bulletin. We saw Defiance file for new Bitcoin and Ethereum ETFs with a unique arbitrage strategy. We heard a stark warning from Roswell about a devastating Bitcoin scam that cost one woman over $100,000. Plus, Bitcoin advocates formed the Treasury Council to push for corporate adoption in Congress. And finally, Bitcoin miners are moving massive reserves, sparking sell-off fears while investors flock to new presales like Bitcoin Hyper, BlockDag, and Maxi Doge. Don't miss out on the next big story. Make sure you're subscribed, hit that notification bell, leave us a comment with your thoughts, and follow us on all social media platforms.